Go ahead, Excellency, and the floor is all yours.
Thank you, Mr. Chairman, your able co-chair, distinguished delegates, colleagues, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. Good afternoon from Vienna, and I join the chairman in welcoming you to this 49th meeting of the Joint Technical Committee. 49, Mr. Chairman. We have come a very long way. Today we set the stage for a busy week of meetings ahead of us, the outcomes of which will have a lasting influence on the markets in the months and probably years to come. As we prepare for the GMMC and the second OPEC and non-OPEC ministerial meetings of the year, it is important to take stock of how much has been achieved. Both the global economic outlook and the oil market prospects show signs of continued improvement. The headwinds of uncertainty that shocked and disrupted the market last year continue to abate. The economic recovery is gaining some momentum. This is reflected in our latest global growth estimate of 4.8% for 2021, up from 4.4% projection we shared at our last meeting. This is major turnaround from the grim conditions of 2020, with our most recent estimates showing the global economy plummeting by 3.9%. Mr. Chairman, 2021, we are reminded, is the year of the ox in China, a fitting symbol for this steady economy. China, which emerged from last year as the only major economy to remain in positive growth territory, continues to exceed expectations and is forecast to grow by a whopping 7.4% this year. India's economy, which fell by about 8.2% last year, is now expected to expand by 7.5% in 2021. We had earlier expected these key economies to expand by just under 7% this year. Globally, historic levels of fiscal and monetary support continue to lubricate the economic engines and keep us in forward gear. Last week, Mr. Chairman, the Federal Reserve Chair, Jay Powell, put to rest any idea of an immediate course reversal when it comes to supporting the US economy. This welcome news was followed by the G20 finance ministers and central bankers announcing last Friday that they will continue to support a strong global recovery, and they lent support to the idea of boosting the International Monetary Fund's firepower so it can further assist developing countries. Mr. Chairman, the Biden administration's massive fiscal stimulus package, which just passed its first legislative hurdle by winning US House approval last Saturday, continues to kindle hope for a sustained rebound. Against backdrop of encouraging developments, oil demand remains on course to grow by 5.8 million barrels a day to just about 96 million barrels a day. The encouraging global economic developments and resilient demand in Asia are upside factors, especially beyond this quarter. Initial data for January this year show that crude oil processing in India rose to its highest level since November 2019, fueled by rising economic and industrial activity. Mr. Chairman, you will recall that the Indian Minister Dharmendra Pradhan underscored this in his comments during the IEA-IEF OPEC symposium on energy outlooks. Minister Pradhan, if you recall, stated that his country's energy demand is expected to rise by 3% per annum through to 2040, around 3 times the anticipated global demand increase. Our capable colleagues in the Secretariat in the research division will go into more detail about inventory levels in a moment. For now, let me say that the outlook continues to move in the right direction, and the data we have before us reflects improvements over last month's report to this committee. Preliminary data for January shows that OECD commercial stocks declined by around 11 million barrels. At 3 billion barrels, they were around 140 million barrels higher than the same time 1 year ago, and about 126 million barrels above the 5-year average. Turning to the latest figures on days of forward cover, OECD commercial stocks fell by 1.4 days from December to January to 69.2 days, which is slightly lower than a year earlier, but 7.4 days above the pre-pandemic 5-year average. The oil storage situation also appears to be aided by a refocus in the US tight oil sector, from production to generating cash flow and rewarding investors. US crude production fell by more than 10% in mid-February, following extreme winter in key producing states like Texas, helping to offset the rise in crude stocks due to the significant drop in refinery utilization rates. Also, regarding inventories, global term floating storage has fallen every month since October and stood at 142 million barrels in January this year, significantly less than the 250 million barrels reached in mid-2020. Mr. Chairman, in a further sign of light on the horizon, the key benchmarks have risen steadily so far this year, along with other commodities, in particular metals, and traders continue to take a strong positive position in oil. Since January, the futures price structure of all three key markets has been in sustained backwardation, an indication that the market is tightening and the rebalancing process is gaining speed. We have come a long way from a year ago. The days of GDP and oil demand figures being in the red because of the pandemic-induced shock appear to be behind us. Yet, Mr. Chairman, we must emphasize in strong terms cautious optimism, cautious optimism, cautious optimism. We must be mindful that COVID-19 infections continue to rise and malicious mutations are spreading across countries and regions. The World Health Organization announced only yesterday that the number of new global infections rose last week for the first time in 7 weeks. The cumulative number of COVID-19 cases now exceeds 114 million souls, and more than 2.5 million have lost their lives, a heartbreaking illustration of how much ground still needs to be covered to defeat the virus. The full potential of our economies cannot be unleashed so long as the pandemic continues to haunt us. Nonetheless, we have abundant evidence to show that the historic voluntary production adjustments agreed last year by the Declaration of Cooperation participating countries were the right course of action at the right time. Today, the market stabilization and rebalancing process continues apace. Furthermore, our mutual efforts continue to benefit from the trusted and respected partnerships and relationships we have nurtured at the highest policy levels and with a variety of stakeholders. The sharing of data, information, and know-how is bringing wider benefits to the market and supporting the stability of critical energy supplies that the world needs to recover, regain momentum, and grow in the months and years to come. Recalling again engaging discussions during the IEF OPEC Symposium on Energy Outlooks, we heard over and over from respected experts the vital importance of inclusive dialogue and cooperation in safeguarding the world's future energy supply. Mr. Chairman, distinguished colleagues, in our lifetime, we have witnessed 7 oil cycles. We have also seen humans walk on the moon. We have seen all rivals on Earth walk side by side in space, and growing numbers of countries working to expand humanity's reach to other planets. I am proud, Mr. Chairman, to say that one of the newest countries joining the exploration of space is an OPEC member country, the United Arab Emirates. Just as I'm confident that humans will one day walk on Mars, I am certain that our world will soon emerge from the COVID-19 pandemic with restored hope and potential. As the Declaration of Cooperation participants carry on with the unfinished business of helping to restore sustainable market stability for one of our planet's most precious commodities, it is important that we continue to work together for the sake of this noble cause. Achieving our goals remains of mutual benefit to participating countries, as well as consumers and the larger global economy. Allow me to reiterate the positive role played by your esteemed country, Mr. Chairman, the Kingdom of Saudi Arabia, through its voluntary additional adjustment of 1 million barrels a day in February and in March. This generous decision has reinforced the existing voluntary adjustments undertaken by all the participating countries. When I think about the accomplishments of the Declaration of Cooperation, I am reminded of what Warren Buffett said about the importance of long-term vision. And I quote him, he said, "Someone sitting in the shade today because someone planted a tree a long time ago." How apt. I want to thank you, Mr. Chairman, and thank all the distinguished delegates to the GTC for this milestone achievements. And we all look forward to, as you said in your remarks, very productive deliberations. Shukran jazilan.